And it's time for us to then enter into what will be our last real discussion. And that has to do with the coronaviruses, the COVID-19's effect on public and private capital markets. I gave you a couple of pieces to read, and I know that each of you read every one of those pieces with rapt attention, right? Like Niklas couldn't put them down. I knew this. Page turners. But I'm just as interested in your opinions as I am in you having been seeded by something you read. And I'm looking for response, frankly, from each of you on this. So start to talk to me about what you think about the coronavirus's effect on the private and public capital markets as you become more familiar with them over the last 4 weeks.
I can go first if that works.
Please.
So, from my opinion, in the downturn of the economy, I think it's going to have a big effect on whether investors will decide between equity or debt financing. And I definitely think because of the coronavirus and because of the downturn in the economy, investors are going to be way more comfortable with debt financing because they have the collateral with the company. And when the economy is going well, investors might be more comfortable with equity because of the long-term payout and this relative small risk. But right now, definitely, if I was an investor, I'd be more comfortable with debt financing. And like we talked about last class, I think this could result in lowering the crowding out of the public markets. So the private equity firms, less private equity investments, resulting in better IPO performance in the next 5-10 years from the startups that are happening right now and are in that stage, and kind of in the long run will help the IPO market just because of the shift towards debt financing.
Well, Dylan, that's an interesting point. I'm curious as to if someone has a retort to that. I can see what you're saying. I can see maybe other sides of a coin. Anybody like to discuss those?
I'll give it a shot. I would think just like with interest rates being so low, like private equity firms might opt to take out more loans so they can pump more money, like leverage buyout type situations. It might be a lot easier for that private equity piece to kind of take over, whereas the public market might not have as much access.
Okay.
For that, I don't think, at least at the moment, loans aren't that cheap because there's a bit of a liquidity problem with the uncertainty. Even though it's not as bad as 2008, but still people want to sit on their cash pile, so there's not a lot of activity in the loan markets.
Yeah, the liquidity in the markets has become a real stress point right now, which is part of why I think we see Airbnb or whoever it was, excuse me, it wasn't Airbnb, but we saw the company with $1 billion in new loan at 10%. And that's not a cheap rate, okay?
That was Airbnb, Rick.
Was it? Okay.
Yeah.
So is there another side to this? What's the problem with taking out a lot of debt in the market at this point?
I can try to go for that one.
Okay.
Well, it depends. It depends on how well you can rebound, but it might have some pretty drastic consequences. If you can't rebound that quickly, you might not meet your obligations.
Okay. What do you mean meet your obligations?
Your interest expenses.
Yeah, so I would think that On one hand, the availability of cheap capital appears to have been pretty good. Certainly rates as we see them published are low, but we are concerned about liquidity at the moment. That could be a short-term scenario, but I'd be a little concerned about companies taking out a lot of debt in a period of time when revenues and operating margins may be off because their debt service ability, that could squeeze them badly. But that's, you got to think about both the investor and the firm side, right? What other comments might you have about how you think these markets might change? I know that Ben had an idea about this, I think. Any of the rest of you have any ideas about this?
I would like to talk about just the public market and just, with the article that was talking about how the stock market is not necessarily representative of the economy, I just think this is super interesting because now we're at a time where we're getting like record high quantitative easing, it seems like, and things like crude oil are being propped up. And so with so much unemployment, I could see a lot more companies that don't foresee going bankrupt just because things are a little bit overvalued. And that's just my personal opinion. And so it's just the idea that the stock market isn't the economy and the economy isn't the stock market. Because if you look at the stock market, it's been almost a V shape. We've consolidated a little bit recently. But anyone who was like bearish completely got slaughtered. And we have almost like a dead economy. We're slowly recovering, but as far as like just economic activity.
Well, that's an interesting point, Zane. So the stock market isn't the economy, and we've seen that very poignantly in the last, month or two. In fact, it's been very surprising to some people. I'll admit, and I'm kind of interested in Yen's comment here, I'll admit that I'm surprised that the equities market has remained as robust as it has. Has that been surprising to you, Jens?
Oh yeah, for sure. When the markets fell, I was trying to read up a bit on research that was done on previous crises, and I was able to find some work done on it. And usually crises last between the downturn lasts between 1 to 18 months, but there's never a correlation between the length of the downturn and the recovery. So it's really hard to find empirical evidence on when it bounces back, and I was expecting when people can't really go outside and participate in the economy that this would be a long-lasting problem, which it might be, and the stock markets would follow. But then everything came back real quick, and it might be because of two things. One, excess liquidity. So most countries are pumping, increasing money supply, injecting cash into the economy, and you see that liquidity first in stocks and bonds and commodities like gold and stores of value. And the other part is, of course, like you guys mentioned, the interest rate. As the interest rate is lowered, practically zero, the risk-free rate goes down, and that means that you discount the cash flows. This becomes a bit technical, but you discount the future cash flows of a comparable asset like a stock at the lower rate, and that leaves you with a higher present value, and that's the stock price that goes up. So my hypothesis is that for those two reasons, we're seeing inflated prices in the stock market, and we might be going into a deep recession in the overall economy. So it might be a decoupling. What do you think, Rick?
Yeah, I tend to agree with you. In fact, we do see that risk-free rate, if you will, being still terribly low, but that's brought about lower overall discount, which brings about higher overall equity valuations or just valuation period. But I would question whether or not that will telegraph into the private and capital and the IPO market. My exposure is suggesting that the uncertainties, while having been accompanied by a low risk-free rate, some of you understand the terminology I'm using better than others. But when it comes to the private and the IPO market, I think we see an equity risk premium that is significantly higher than it was, and we don't see that same equity risk premium embedded for existing public companies yet, or at least not the existing public marketplace as a whole. So that's an interesting divergence, and I've got to admit to you, I don't know exactly what to make of that.
Yeah, it's troubling just because. I mean, I mentioned this in one of the discussions, but I kind of just want to state it verbally over this so everybody could get the chance to get this information. So I was doing some research on the 2008 financial crisis, and supposedly just with all the bailouts, as you could say, and helicopter money given to companies, we as taxpayers, as individuals, essentially, like, to make it an easier analogy, I guess, our future selves would have $80,000 on average per person if we just didn't have the 2008 financial crisis. So that's a stat that I heard that makes me really worried about what's going on now, as far as just infinity quantitative easing. And I mean, even just, not to get political, but just some of the riots and protests, just because with all that vandalism comes our taxes. And so that's something I'm concerned about just moving forward, because I think this could have a long-lasting effect. You know, it's not like we are experiencing Great Depression-like symptoms other than unemployment. But yeah.
That's an interesting perspective, Sadie.
Yeah, I would say it's hard to predict the future, but one of the articles really fascinated me. Like, I think it was the New York Times article that kind of said that investors tend to overlook, like, they're so common with crises from the past, I guess. So they have accounted for, like, the drop in Q2, I think the article said. So that's why maybe the quick recovery and what Rick was saying, like being a robust, the stocks were, they keep on climbing, and that's a
This kind of, sorry. This is kind of a little bit off topic, but kind of what Marco was saying is, as we have a lot of this government stimulus, down the future, we're going to have to pay it back, right? So taxes in the future are probably going to skyrocket, kind of pay back for that government stimulus. But also, just kind of bring up another point of how different industries were kind of hit differently because of the virus. Like hospitality and leisurely travel were just decimated, whereas other companies that had like strong internet presence, like Amazon, Netflix, they were able to kind of take advantage of the situation. And then we also saw like traditional brick and mortar stores like JCPenney's, Nordstrom's, stuff like that. That business model is starting to really become stressed at this point, because people are no longer going into those retail stores, and they're moving more onto online shopping and kind of that convenience that offers. I just thought that was interesting, because I think that JCPenney actually filed for bankruptcy 2 weeks ago, and they got delisted off the stock exchange, I believe. They're no longer qualified. So I think it's just interesting how technology has had just a big impact on how people are recovering from it.
Yeah, I agree. I think we're becoming more efficient. We're going to use technology more and more, especially like video conferences and in the business world. And instead of like, we're going to save the environments basically because we're not going to travel that much. I think we're going to use these video conferences more instead of flying. And I think meetings and shopping, everything is going to be more over the internet. And I think we're going to be more efficient and develop new like human behaviors, I guess.
I don't know about what all of you guys think, but personally, like, I was wondering about how possibly, like, because of how different technology is now compared to, like, I don't know, LA crisis or .com crisis, like, we're not super far away from them, but things have, like, been improving, like, in the business world and, like, just in our lives, like, technologically. Like, that might have, like, a positive effect on the effects of coronavirus and the way that, like, a lot of businesses are still able to, like, function. Like, they were able to, like, change the way they were doing things, but still, like, provide to the community, which in turn helps the economy continue, even if it's slower. I don't know, but that's what I was wondering if you guys had any opinions on whether or not that'll be, like, one of the factors that helps us stay more afloat or, like, prevents the next, like, big recession.
I guess I would add to that question, and I really am, just like you, Damien, curious what other people have to say here. Has our current technological capacity mitigated the potential effects of this crisis or amplified the potential effects of the crisis?
Definitely, yeah. Definitely go either way.
What do you guys think?
I think it could be both, most definitely. I mean, I know with like online brokerages also came just like a lot of volatility in the market. And so there's a lot of fear as well. And that could even just, not only in the market, but just socially. You go on social media. And also just the amount of misinformation. If you ask me, there's just a lot. There's information nowadays is just very saturated, and it's just, if you want to be technologically adapt, you have to look at multiple sources as well. And I mean, you look at like cloud service companies like Zoom, and they've prospered during a time like this. And I think that's one thing that has like helped prop up the economy and the markets. But I do see, at least to a degree, certain companies, especially technology sectors, moving more towards like working at home, or even just businesses becoming more technologically aware and like technologically ethical. And so, you know, things like cybersecurity that maybe aren't so common now will be later on in the future as just technology becomes more popularized after something like this, that I feel like could amplify it. And as for the market, I think it has most definitely helped, but I can't give like a clear black or white answer, of course, because I see reasons for why it would and why it wouldn't.
Yeah, that's a good point. I've had a conversation with one of you very recently, and we realized that at one point in this class, we had people spread out in 7 different countries across the planet, all participating in our discussions in class. We couldn't have done that 5 years ago. Certainly couldn't have done it 10 years ago. And I think that's just an example of how we have the technological capabilities have helped us minimize this. But Zane, you're right in terms of the spread of good and not good information has also been dramatically amplified because of our technological capability. So turn this back to the markets then. How do you think that this affects the private and public capital markets? And I'm not as concerned about the entirety of the public capital market as I am the IPO market, since that's what we've been focused on in this class. So the private capital and the IPO markets. How do you think that we move forward, or do we move forward with any changes at all?
I would like to touch on this, because I think that in order for us to understand this, I think we should take a step back and look a little bit on the history, because in situations like this, I believe that history can be one of the best indicators for us to tell what has happened, for instance, with the prior epidemics. And in fact, V-shape economy has monopolized the prior shocks, including all the SARS, the H3N2 called the Hong Kong flu, and the 1918 Spanish flu. And looking at those, we can see that the economy really spiked back quite rapidly. And then also I would like to point out that which is sort of called the VIX chart, which is sort of considered as the fear indicator in the market, which it's measuring the trust of people in the market. And when we're looking at 2018, it took a bit of a long time for the VIX chart to stabilize. It took almost, I think, was it maybe half a year to stabilize. And when we look at the VIX chart now, it went up in 30 days to higher levels than in 2008. And then it's already now pretty recently, it's really low, and it's been declining on an extremely fast pace, meaning then that people are starting to trust more the market overall. However, then what is considered as the Buffett indicator, which is the total market index compared to the GDP, and this indicator then is telling us about if the market is overvalued, and for now it's the total market index is about 31,623 billion, which is about 146.8% of the last reported GDP. So it's really, really high, meaning that the stocks would be overvalued. And back in 1982, it was about, was it 80%? And that was really, really low at that time. So where I'm going with this is that these indicators, what they can tell us that when we have epidemics like these, that we are able to recover quite rapidly. And especially now, we can see that from the VIX chart, for instance, that the market is having a good amount of trust, meaning that people are willing to trade and be in the stock markets. However, what those do not imply to us is that where this will go today. So this is just history of what we have been seeing, but the discussion just was about that how are we going to go forward from here? It's impossible to say. However, while looking at the data and the resources that we have, it sure is indicating that we would recover from this pretty quickly. And that's sort of what I wanted to say about this, that I believe that we will recover from it quickly. However, the impacts of the COVID-19 is still unknowable, because it might be that it will go for a longer time. So these are some interesting factors. What I thought that is good for us to understand about the situation, and also to have a reference from where to look at.
So given that, and I think those are some interesting points, Hayden, I'm going to ask you to make a comment here, so you can come off mute. But given all of that, Hayden, if you're an investor in the private capital space, are you excited to throw your money into that marketplace right now?
It depends on the companies we're talking about, because there's a lot of different types of companies in the private market space. But I mean, there's always opportunities out there.
So are you saying then that we maybe have a hard time generalizing what the markets are telling us, and that this issue of the virus having been good on some elements, or technology having been helped with mitigate from the virus on some and made it worse on others, then maybe we are seeing a bifurcation in the market, a greater divergence, and such that firms that have weaknesses or possible weaknesses have been revealed, and so maybe stay away from those. But some types of firms, those that use cloud computing, delivery, etc., have become meaningfully more attractive.
Yeah. Oh, absolutely, yeah. And sorry, was someone else gonna say something?
Yeah, I was just gonna say from my feeling, kind of based on these last few comments, this crisis is different than other recessions where it's not necessarily, the 2008 financial crisis was a market failure. Like the market itself failed because of flaws in the market, where this is kind of an external shock that is maybe eliciting some company weaknesses, and it's bringing to light these things. But what my feelings are related to this is that the coronavirus, we're definitely going to see a decrease in capital activity. Like we're going to see decreased capital activity both in the IPO and private markets. But I think once things recover, they're going to recover to where they were before. And there's not necessarily anything that would cause a shift from the coronavirus that would cause a shift in how money is dispersed between private and public markets. I think it would be more of a function if the coronavirus brought about new regulations, which we often see. Crises often lead to new regulations. I don't know if that'll be the case here, but that I think would lead to more of a function of a shift in how money is dispersed between markets than the crisis itself.
Hey, Jaden.
Mm-hmm.
So sorry to interrupt you, but I just saw your baby. So cute. You have to show us your baby.
Oh,
yay! Congrats!
Over a week old.
Congratulations, Jaden.
Yeah, it's not every day you can bring your newborn to show and tell, right? Yeah, that's tremendous.
That's great.
So, Dion, I want you to come off of mute for a minute here. If you had to choose, if you're a large money institutional investor, and we know that secretly you are you more interested jumping into the private markets today or the public markets, given the effects of the crisis?
Just based off my knowledge, I would probably say private, just because I have little knowledge on all of this, but the knowledge that I do have, I feel like public market is being affected more with all of the COVID-19, and so I would just feel safer doing private.
Well, it's interesting. The private markets are considered typically to be less safe than the public. And we see more private market failures. Firms fail in the private markets than we do in the public markets. But I'm not sure that I disagree with you. Why do you think that the private markets may be a place for greater safety at the moment?
Probably just because public market, I feel like they're losing people every day, and people are probably pulling their money out of companies. In private markets, I just feel like Instacart, for an example, they're doing well right now and they're making a profit finally, but they're not in the public market. I don't really.
Okay, well, that's a fair response. So, Alex,
can I add something to that? Can I add something to that?
Please.
I think that also the private sector it's investing a lot in technology right now, which, we know that technology right now it's increasing
And
Okay.
if I may, I wanted to say two things. So first, I believe that in the private market, companies, they really have to adapt themselves to the situation maybe more quickly than in the public market if they want to find fun, and because it's harder for them to have fun. And also, I believe like if I was a private investor with a lot of cash, I will more go into the private market and try to find new companies that have a lot of potential today, rather than going in the public market. And also maybe that the companies that are seeking for private funds, they might be more easy to negotiate with right now than before. So that, I don't know.
I might have something to add to that and to what Hayden was talking about. So I think there's going to be a pretty big shift on where the funds are going to in the private market. Probably going to see a lot more seed and Series A funding than later stage, especially with the acquisition markets dropping, and probably drops in IPOs at least this year as well. But the new wave of innovation that kind of comes out of this crisis, I think there's going to be a lot of opportunities for private equity investors in that space.
I tend to agree with you. Reed, I see that you're off mute. Do you have something to add to this?
I was just going to make a comment, maybe get everyone else's input on the fact that I think Jaden touched on this as well, in moments of, I guess, crisis or whatever, the effects of that and what emerges out of that tends to be like a paradigm shift in how we think. And I know last semester or a couple of semesters ago, a man by the name of Steve Young came to talk about social capitalism and the principles and the importance of protecting shareholders in that way of thinking. And he mentioned that moments of crisis often bring out socially aware or minded principles. And I wanted to see, maybe get everyone else's input on that, and the rise of the social bond market and what that means for investors.
So to give you some perspective on what Reed's referring to, Mr. Young was representing the Co Roundtable, and it's an organization that promotes moral capitalism, kind of along the John Mackey conscious capitalism construct. And he had some very interesting comments. So do you think that through social media, awareness, living through difficulty, strife, turmoil, uncertainty, that we become a more conscious investor society?
I definitely agree. I just got off before joining the class with a call from a finance firm that's starting a exchange traded fund, and what they're doing is they're taking large cap 100 of the biggest companies in the S&P 500, and they're putting them into their own fund. But what they're doing is they're taking out stuff like oil, weapons manufacturing, and stuff like that. So they're practicing what's called ESG, or sustainable growth, environmentally sustainable growth, which we're seeing a lot of, and a lot of people are wanting to invest in that, especially younger investors. So we're seeing a huge change from, I guess, traditional just investing in what makes me money to what's also making me money, but also supporting the earth and kind of being socially aware of those actions.
The good points, Abasi. I know that you all know what a C corporation is, and I believe you all know what an LLC and a proprietorship, etc. are. What is a B corporation? Does anyone know? A B corporation? So a B corporation is like a C corp. It's fully incorporated, only it has as part of its bylaws and its canon, if you will, an edict to give some percentage of either its gross revenue or its net profit or whatever, some percentage of it to nonprofit activity. So, so its design is not simply to create value for the equity stakeholders, but to create value for the society around it. And it's structured that way to give cover for management that want to be very giving and want to be very charity-oriented, to not have to put up with problems from their stakeholders having given away some of their profits. So we now see that just this year, the instance of B corporation formation has increased like 16%. And that may not seem like a big deal to you, but that's big. That's big. And we actually see a couple of funds that have sprung up that are only going to be investing in B corporations, which I've never seen that before. So going a little bit beyond the socially conscious fund construct to simply investing in B corporations, which kind of talks a little bit about what Abbasi was saying, and I think might be amplified as an outcome of a crisis. We become more concerned about our fellow man as we are more concerned about ourselves as well. That said, take us back to the public and private capital markets. How do you think all this shapes the markets? Some of you we haven't heard from yet, and I'm dying to hear from you. In fact, Braden, I'd love you to come off of mute and give us some input. Maybe you'll even show us your face here. Katie, you have any ideas about this as well?
I definitely think we're going to see like a dip in different industries like we've talked about, but I think coronavirus has also brought a lot of opportunities to different industries, and we're seeing them able to kind of like grow and flourish. And so like kind of like what we were saying, like technology has definitely kind of provided a little bit of cushion for some of these industries. Like, for example, like we talked about how we're able to continue like educating ourselves through different technology platforms, but also like in the healthcare industry, they're now able to host like appointments like online instead of in office. And then just the idea of like contactless payment and stuff like that. So I think, you know, we're seeing a lot of change within different industries. And like I said, some are definitely taking a hit, but also I think some of this is providing opportunities for different industries as well.
So do you think, Katie, that we were already headed these directions and that maybe crisis just speeds up the disruption?
I think, yeah, I definitely think that because of coronavirus, we've had to rethink a lot of like businesses have had to rethink a lot of their like business models. And I think that kind of sped up the process. I read an article on Forbes that talked about how this was a lot different from a normal recession in the sense of like the timing. It was kind of like similar to like what a natural disaster would do. And so it's like a different type, or this would be like a different type of recession than just like a normal market correction.
Well, it is a natural disaster, right?
Yeah.
Yeah. So I know that both Jacob and Noah tend to be really thoughtful guys. So I'm kind of curious as to some of your comments on this.
Well, the B corporations, I didn't even know that was a thing, and I think that could be really popular with like the younger generations that are starting to invest, just because it's like a trend that we care a lot more about, like, I guess, the environment and everyone's well-being than maybe older generations that like to just make lots of money, even though making lots of money does sound nice, but I think that those B corporations will be very successful coming up, and it sounds like that 16% is really coming along.
So up until Jacob slammed me a moment ago, he and I were pretty good friends. So
Yep, sorry, Rick.
that's okay, brother. Nothing but love. Okay. So Noah, what do you think about this?
I see B corporations growing for sure. I mean, they definitely have. Our generation is definitely the generation that is on board with global warming and other like issues with that. Not saying other generations aren't totally on board, but you know, sometimes they're not. I don't think my grandparents believe in global warming, but I see those growing. I think the more people put money into them, the more they're going to do better just because they have more access to capital. I think maybe our generation needs to get older and more wealthy before they really start getting the ball rolling. But I think ethical investing is something that...
Well, here's an interesting phenomena. As generations tend to get older and more wealthy, they tend to become a little bit less socially conscious because they know how hard it was to get wealthy. But then as they get yet older still and start to face the latter part of their lives, they start to become a little bit more socially conscious again. So it's an interesting cycle. So I'm kind of curious, Jack, I'll have you come off of mute here. So do you suppose that hardcore capitalist investors, which are predominantly those that are feeding the private capital markets, are they going to warm up to this social consciousness? Are they going to warm up to our inward look, our retrospection as a function of crisis?
I think so, yeah, because I don't really think they have a choice not to, because I think with the younger generations being so conscious and into this kind of stuff, I don't really think they can turn a blind eye to it. I don't think they can just keep going on using the same channels they have been doing.
But we're responsible to pay your college tuitions and help you get into your first houses and leave inheritances to you. Do you really want us to have a difficulty doing that so that we can help others?
Well, I think it's different, and for some people it might not be as profitable, but it can still be you still be very profitable with these BU organizations.
I got a comment about, I think we could really start having the older, like hardcore capitalist generation start investing in like the B corporations and doing, you know, socially conscious investing. If we just structure our tax system in a way that incentivizes people to do it, so maybe like there's two different tiers in terms of capital gains taxes for people who are investing in B corporations or funds that have, you know, mutual funds that are primarily B corporations or whatever. I think you have to kickstart like the initial older generation believing in these types of investments with like an actual economic incentive in terms of like a tax structure, different tax structure, something like that for them to kind of start in getting into the idea.
Well, it's an interesting comment, Dylan. So charitable contributions, egalitarian efforts are already tax deductible. You
yeah, but
enough.
Well, okay, so charitable contributions are only deductible off like your personal income taxes, and they don't honestly make that much of a difference because they just reduce the taxable amount of income you have. But what I'm saying is, if in terms of investing, we could have like a two-tier system where capital gains. So I'm not 100% familiar with the capital gains structure of tax, but I think it's taxed at a lower rate than the top marginal income tax. But I'm saying we could reduce the capital gains tax for primarily B corporations. So if you primarily invested in B corporations or hedge funds, mutual funds that invested in socially conscious companies, you'd get taxed at a lower rate than the normal capital gains tax.
Well, that's a really interesting idea. That's a really interesting idea. So how does this affect the public and private capital market? Would tax changes affect motivations for investing in these markets? Skylar, I see you nodding your head.
I feel like a lot of those B corporations might be younger corporations that don't quite have the incentive to go public yet. If they could have investors want a low return in that public market, it might drive them to go into the public market versus staying private for longer, if there's just an incentive for people to go in on a public side.
Okay. Gary, I'm not sure that we've heard from you in this discussion.
Yeah, I'm actually been trying to look at more information on B corporations because this is the first I hear on this, but there were quite a few comments that just made me think of many different things, and they mostly are about the spending aspect of the current situation, and I'm still trying to think of how exactly it would affect the rising of the B corporations. So I work at a credit union. It's a very small credit union, but we've been able to kind of get some insight on many different aspects of the current economy. And one of the things is savings have exponentially increased since the coronavirus hit than it has in, I believe, this century. So people are saving more money, and I cannot remember who started talking about this. I believe it was Noah, but they were talking about how basically people need to get wealthy so that they can start kind of contributing to society. But we're doing exactly the opposite right now, which is more on how we need to spend more money, but people are not, and that's really hurting the economy right now. But again, I'm still trying to think of how that would affect specifically the B corporations.
Could I jump in and just make a kind of overall comment? I think in this discussion, we've brought up some very interesting ideas and made a lot of points, whether related to these new type of corporations or technology and a bunch of changes that may happen because of coronavirus in the business world generally. But as far as everything I've heard so far, there's nothing that suggests to me that anything we've talked about here will lead to a significant shift in how money is dispersed between private and public markets. There may be shifts in industries that receive funding. There may be companies that are going to do better and worse, but there's nothing necessarily that we've talked about yet that suggests that because of the coronavirus, IPOs are going to increase, or because of coronavirus, IPOs are going to decrease and more people are going to go to private funding. I think coronavirus is having a lot of effects on the market generally, but I'm not seeing anything in our discussion yet that suggests it is going to shift how money is dispersed between public and private markets.
So I would agree with the possible exception of, and somebody made this point a few minutes ago, that money in the private market tends to have more time to incubate and isn't subject to quarterly filings and nanosecond transactions and constantly being under the scrutiny of the public eye. And so maybe they have time to innovate. Also, private market companies tend to be smaller and as such tend to be more nimble. So those might be interesting influences as well. So Ashlyn, I'm not sure that we've heard from you in this part of the discussion, although you've been great to be part of most of these. Any comments you might like to offer here?
Yeah, I think one thing that's just that I find most interesting about this whole situation is just simply like human activity. So we've seen as people are cooped up in their houses, like we've seen the crazy effects on the environment itself between like the drastic decrease in our carbon emissions and all that stuff. And so I guess what's interesting moving forward is, are humans going to, hold on to this hope and kind of realize that it is more feasible to decrease our carbon footprint than we initially thought and kind of continue these patterns of remote learning and all that type of stuff? Or I'm wondering, is it going to go the opposite direction, and are humans in society kind of going to overcompensate for being cooped up in our houses for so long and start traveling more, all that type of stuff? And so it's going to be interesting to see the effects on, I guess, the environmentalist industry and see what kind of companies come out of this. And then also kind of the B corporations, is that going to drive more of them if we start to overcompensate and see a huge increase again? So yeah, that's what I've kind of found most interesting from this conversation.
Let's see comments. So I have to admit, you guys have kind of caught on to this B corporation discussion more than I thought you might. I offered this as a throwaway discussion element. I didn't think you'd find that interesting. So Jens, anything you'd like to add to this particular critical discussion before we move on?
Maybe just I had some thoughts when we were discussing that some students were saying that they thought private markets were less risky than public markets. And I think a reason for that is like Bill, I think it was Bill Kurth who said this, and he mentioned Home Depot, that they were doing 400% on their sales compared to last year, I think, this spring. And he also said that some of the businesses he is exposed to is struggling, like tourism, leisure, that kind of stuff, while others are doing great. And I think since there's this big shift in behavior, and we don't know yet how long it's going to last and what's going to stick, but there's a great opportunity to start new businesses, and some businesses that have already started in the marketplace sector are doing great when it comes to the delivery. One example is Instacart. So that it might be that this crisis have fueled or accelerated, for lack of a better term, disruption a little bit. So I just wanted to add that and say that I'm also optimistic when it comes to startups and new companies in private markets.
Yeah, and that's an interesting perspective. So Ben, I'll have you come off mute here. You might get almost the last word in this deal. What do you think? Has this crisis shaped these markets in the coming decades?
Well, in terms of investor behavior, I don't think it has. I think a lot of people have taken some opportunities, but I don't think it's made massive changes in terms of that. But I guess, yeah, honestly, I'm not sure. It has to depend on from economy to economy and market to market. Like some economies were greatly benefited from this, like online delivery services like Amazon, and obviously Instacart we saw had what was it, like a 450% increase in sales and revenue. So honestly, I think the answer to me is it depends.
Okay. What else might you like to offer on this, Jens?
Do I have anything else?
Do we?
Maybe more on your perspective, Rick. You have a lot of experience, and you've seen other crises before, and you've been an investor through crises.
Yeah.
Do you have any experiences you can share with us in terms of managing this extra risk?
Well, I guess the first thing that I would offer is emotional reactions to whatever type of crises tend to be relatively short-lived. The World Trade Center was bombed, and we all became extraordinarily patriotic and very considerate of each other. And relatively quickly, that then dissipated. The financial crisis came about, and we all became very concerned about liquidity, and the savings rate went through the roof for a while, but then that dissipated. And so my sense is some of the emotional reaction to this crisis will similarly dissipate. But if you're worried about this leading us to a depression, I would say in a systemic basis, maybe not, but on a per household basis, absolutely. Because if your household's unemployed Maybe you were a $80,000 a year worker, now receiving unemployment benefits that are giving you barely half of what you'd be getting before. Well, you're in a depression in your household, right? And so the effect of that on these markets can't be ignored. Now, from the risk standpoint, I'm like a few of you. Even though as an investor, I'm not very risk tolerant. Let's be honest with each other. I don't have 30 years of a career to make money back if I lose. And so I've become a lot more risk averse. But in the current situation, with the equities markets being what I think many of us agree are pretty overvalued, I'm much more interested in private capital right now than I am in public investing. But private investing where I've got as much diversification as I can lay my hands on. And that's hard to do unless you're part of a fund or you're a big institutional investor, right? So, but I think that the nimbleness of the firms in the private markets, the lack of needing to account to every whim of public scrutiny that benefit the private markets have, I think will give them a leg up over the next decade in terms of innovation, the ability to incubate ideas, and they frankly just get a lot more interesting to me as everything else becomes a little bit more uncertain.
So Rick, what would it take for you as an investor right now, since you are part of the older generation that we talked about? That
you guys skate right on the edge, Brower. Those are
okay.
Reserved until after I issue grades. Okay.
Okay, my bad. I should have known. But what would it take for you to invest primarily in B corporations? Would it be like a different tax structure, or would it be what would it take, or would it just have to equal the amount of return and low risk that you want? Or
yeah, that's a really interesting question, and it is a bit of field from some of what we're focused on in this class. But I think that you'll find that better resourced, maybe even older investors have already started to make that shift. Whether it's the B corporation, which is simply a structure to give cover to the management from suits by shareholders and the board of directors, okay? But whether it's the B corporation or it's just putting pressure on the board to look out for stakeholders other than the equity shareholders or not, I think you're going to find that those investors have already started to make that shift. And I'm not sure that there hasn't been motivation there for a long time. The CEO roundtable here, a year or so ago, finally came forward and canonized, not in a legal way because they don't create law, but in kind of a social way, that stakeholders are expanded in their eyes and no longer simply the equity shareholders. That gave cover for them as well. So what's it going to take for better resourced investors? I think part of what it's going to take is for the promise of these more egalitarian entities, B corporation or not, to show that they can be nicely profitable and show that the investments that they make as a function of their egalitarianism actually benefit the economy rather than simply some individual's utility. And I believe we're seeing that. John Mackey has shown us that. Steve Young is championing that cause, and they're amongst a growing group of activist investors that are doing that. I don't know if that answers your question, Dylan, but it's probably as I'm trying to overcome the abject insult I received at first.
I didn't mean it as an insult, but
no, I'm messing with you, brother. You know that. Okay. So I got to tell you that I've been very pleased with how the last 4 weeks have shaped up. Not so much because of prep work that Jens and I did to this, although there was a significant amount, and Jens participated far more than I anticipated he might, but because of how you guys have participated and how you have stepped up and done a good job on the concept development assignments and thoughtfully considered the accessing capital market assignments. I love this part about May term because for those that want, it's the opportunity to be a little bit more thoughtful and be a little bit more creative. And you've clearly done that. I love that we've had students from literally across the globe join us. And in fact, for heaven's sakes, one of the faculty members on this is what? 7-hour, 10-hour flight from here, something like that. Here being Utah. And so this has been a really fulfilling experience for me. And you're the ones that have made it that way. I hope you know I appreciate that. Jens, I'm kind of curious as to what you might offer as we kind of wrap our class up.
Yes, I can just echo what you said, Rick, and I've been speaking to Lauren. Some of you might know Lauren Loray since I graduated from Westminster, and we've always been talking about doing a guest lecture or something. And then this idea came up with Rick that I could help him a little bit during a May term. And I've always wanted to teach a little bit on the side because I get to learn new things. I got to learn about all these amazing companies, the presentations you guys did. And I just think it's interesting to give something back to the college community. And COVID is it's not a pandemic, it's not a good thing, but for me, it was probably the thing that obviously made this class come online and a way for me to participate and actually lecture it. So we've gotten something positive out of the negative as well. And as Rick said, I was curious how this was going to work, and I think it's been working just fine. And the participation and the quality of the assignments and last presentations has been really impressive. So all the groups can be proud of the work that they've done. It's definitely, I learned a lot from listening to you guys that I'm gonna remember about these businesses. So a great job on that. And I hope when fall comes that you will be able to come back to Salt Lake and be on campus, because there's so many great things going on that campus and in Salt Lake in general. And it's a pity that you have to be away from student life, definitely during May term. So I hope we can come back to normal pretty soon over summer.
Yeah, and I'm trying to figure out what the word normal means.
Yeah.
Yeah, right.
Whatever that means.
Exactly.
And I just want to add, please add me on LinkedIn or contact me. You have my phone number, my email. If you ever want to chat, if you want to discuss something, ask advice. I'm not sure if I have any advice. I'm still trying to figure my career out. But feel free to contact me whenever, and I'll respond and talk to you. So.
Well, Jens has been a great contributor and extraordinarily valuable to you guys. I hope you recognize that and do maintain some dialogue and network effect there, if you will. Well, guys, we're about to wrap up. Any final comments that any of you have with respect to the course of this discussion today before we close out?
Can I get some? Sorry, Zane, you were saying something. You can go ahead.
It might be a little late for this, but I just think something that would make me like 100% okay with investing in B corporations would be maybe dividends, because, maybe the return long-term isn't that great, but if it's just kind of consolidating, you can still buy at a cheap price and you can still get dividends. And it's just quite interesting. And I don't know where that money would come from, but you look at a company like Altria, just a cigarette company, and they pay a very good dividend. And they're stocked as well. But I mean, I'm pretty sure like they do have an overall downtrend just over the years because cigarettes are less popular. But I think dividends would be more of an incentive factor for me personally to invest in something a little bit more ethically conscious.
Yeah, that's interesting, and I think that the tax structure issue could be very interesting as well. Very good. What other comments before we sign off, guys?
I just wanted to completely disagree with what Dylan said. Rick, I don't think you're old at all.
This is my man, Damien.
That's definitely a lie. He's old, but I just wanted just turn your head, Rick, and that's evidence enough.
Yeah, well, sad but true. Sad but true.
I just wanted to say this is my first May term I've ever taken, and it's probably different than any other May term because it's, this class would have been in person. But I just wanted to say I thought this went awesome. This was great. This was of all the class structures I've taken, May term is one of my favorite. And I don't know if that's just a general truth or that's because this was a good class, but I just want to thank you and Jens for making this was really a good experience.
Well, thank you. It's believe it or not, it's probably as fulfilling for us as it could be for you. Like Jens commented, I tend to use May term as a place where I go to learn things. So I made you guys do all the teaching.
Thank you for that comment, Jaden. Appreciate the nice words. Does anyone else have any feedback, especially when it comes to the term project and the topic of marketplaces? I'm curious to hear if you learned something new and thought it was interesting to work with these types of businesses.
I thought it was really helpful to get the open table case open table case first and to read about that and to kind of familiarize myself with how online marketplace businesses work and kind of like understand why like the verticalization of the market is like adds value and stuff like that. So I thought that was really important to me understanding the kind of overall business structure. So I really like that. I can't think of anything that's like would be helpful in a constructive criticism way though.
Great, Dylan. Thanks.
Thank you.
Feel free to critique it as well, because if we're going to do this one more time, we want to improve, and to improve, we need to also understand the negatives. But thank you for those comments.
I think just one thing from my perspective and this is naturally the case whenever you're doing anything on primarily private businesses, is it was somewhat hard to navigate trying to find sufficient information, especially if you had a foreign company, which isn't necessarily a bad thing, but maybe just slightly clearer direction on either how to access, maybe through PitchBook, like maybe how to access information, or what to do if the information's not available, because there was a little bit of uncertainty there for at least our group.
Good points.
Yes, that's a good point. I agree also.
Well, guys, it's been a pleasure. I hope you enjoy the rest of your summer. And some of you I will be seeing in the fall. Some of you, I think this is your last hurrah, right? As you're graduating. So
yeah, congratulations to those graduating.
Good, nicely done. Well, guys, I'm going to go ahead and sign off. And if you have some assignments that are still due to be submitted, make sure we get them quickly. And again, it's been an absolute pleasure. Have a great summer.